Hi everyone, welcome to our Investor Horizon webinar. We are letting all guests slowly entering, and we will start in about 1 minute to make sure that you're all there. Just for the record, we will be recording this webinar of today, and it will be available on the Investor Horizon platform where you can reach all the webinars for further view. So as is 4 and 1 minute, I would like to then slowly open the session. As you know, we're going to have today Dominic Briggs is our panelist for today, and I hope that you can see my screen right now. Our session is called Investing in Blockchain Technology in Europe, an investor's view, and it will be moderated by me. My name is Carla Marquez from bwcon. We are one of the partners of the Investor Horizon Accelerator, and I will guide you through this session today with Dominic. So before we kick off the session, I would like to introduce the Investor Horizon Accelerator, who we are. We are an accelerator program for Series A companies, who is financed and promoted by the European Commission in association with Eureka. We have Tech2 as a lead partner of the consortium, and then we have the other partners, BPI funds, Meta, bwcon, Eura, EVN, and IS Business School. So the Investor Horizon Accelerator, it was launched in June 2019. So far, the accelerator has been supporting 500, or will be supported 500 SMEs until the end of this year, so until 2001. 450 companies had been already accelerator, and we have 50 seats left until the end of this year. So the final cohort will be taking place within the next months, and applications are open until the 28th of May. So if you're considering applying for the free acceleration services of Investor Horizon, this is the right time to do it, because we are almost closing our application phase. Each company spends about 4 to 6 months within the accelerator, where they will be part of Investor Horizon trust groups. They will have sessions together with entrepreneur and peers and expert coaches who would then lead them to polish their pitch decks in order to be investment ready for the next investment round, so A rounds. Is open to high innovative deep tech companies that are located in Europe and the Eureka countries. As I said, you should fulfill several minimum criteria to apply for this acceleration program. You should have raised seed funding of about 150,000 to 200K in equity or grants. As I said, you should be based in one Horizon 2020 or Eureka country. And as I said, we are in the last final days to apply. So what's important about the Investor Horizon program is free of charge. We also don't ask you to provide any equity. Is merit-based. What does that mean? It means that we evaluate your performance and regarding to the interest that you show in the program, and you have to be committed to basically attend the sessions, and it's kind of a win-win situation for all the involved on the program. So it's a very collaborative commitment. We expect you to be fully committed into the activities of the program. You will meet a lot of peers and coaches and interesting contacts to further improve your network and to be investment ready for your next round. As I said, you should be a technology-based company and have really looking forward to your next investment round within the next months. Another shortly to speak about what's available on Investor Horizon community and website. We have an availability of online courses covering different aspects. So, for example, healthcare, intellectual property protection, or exit strategy, where you can find really useful resources to keep building your company. And last but not least, we also have the Euroequity community, where we have an extensive network of investors and SMEs throughout Europe. So make sure to join the community as well. And lastly, please save the date for our next webinar, which is called How to Survive Your Startup Due Diligence. Will be taking place on the 17th of June at 4 p.m. So as right now. And we will have Luigi Amati, who is the CEO of Mita Group, one of the partners of Investor Horizon. So with that said, let me close with introducing our speaker of today, Dominic Briggs. As I said, he has a master's degree from the EU Business School, Oestrich-Winkel, here in Germany. He's one of the co-founders and partners at Blockwall, a VC who invest strongly in blockchain and DLT technologies. He's also the co-founder of the Blockchain Research Institute Europe. And lastly, he serves as an expert panel member at the EU Blockchain Observatory and Forum. This is an initiative of the European Commission with several points. So I would like to give the word to Dominic, so we can go, and I will give you a small overview of how will be structured this session of today. He will be presenting for about 20 to 30 minutes, and then we will go to questions and answers. If you, during the time of his presentation, if you already have some questions, feel free to post them already in the Q&A section. And depending on how the flow is going, maybe Dominic will decide to address them right away, or we will go to the Q&A. We will wait for that. So with that said, Dominic, I hope that you are ready. We are looking forward to the inputs that you will give us today, and I will give the word to you right now.
Perfect, Carla. Thanks a lot. I will start sharing my screen. I think that's best if you can just give me access. Perfect. Can you see my screen?
Yes, yes.
Okay, perfect. Well, welcome everyone. So we thought today, as a focus topic, blockchain, it might be interesting to see how we look at the market as we are focused on blockchain technology. Maybe a few more words about myself. I mainly spent my time in management consulting before, mainly operations excellence topics, lean management. And I came across blockchain around 2014, 15. And my partners and myself, we saw the opportunity in the German market that in 2016, there was no real professional product out there. And we wanted to give investors the opportunity to get an exposure in this new asset class. And along the way, of course, our thesis developed over time. But we, as Blockwell, we position ourselves as a platform. So we see that there are opportunities on the one hand side, investing into tokens, and where this fits in, I can come later. So we raised a first fund focused on tokens only and kind of the protocol infrastructure, where we initially raised 16.5 million, which is currently at an NAV of roughly 60 million. And we see a huge opportunity in the applications and services which are made possible by these protocols, where we're setting up a more traditional VC fund, only investing in equity, and not in tokens. And both worlds are important to cover the entire market. And we see ourselves more than just a financial capital. We see ourselves as a value-add driven fund. And that's why also we engaged in co-founding the Blockchain Research Institute Europe, which we did together with Don and Alex Tapscott, who developed this institute years ago in Canada and are now on a global expansion plan to funnel education and to help corporates and more people to understand what the impact of blockchain is. You can see my co-founders here. We are in a team which is now constantly growing to cover the investment horizon. Before we go into the detail on how we invest, I just wanted to, for those who are joining or maybe are listening in, what is blockchain, how does this fit in? I just want to represent our view on how we see blockchain as an addition in our existing internet architecture. So if you think back and see how the internet protocol architecture developed, it was a continuous development of different protocols adding to new functionalities in the internet. And every time a new protocol was added, the functionalities of the internet were enhanced. And every time that happened, a new universe of business models suddenly became possible. So if you think of voice over IP, for example, Skype as a company wouldn't have been possible without voice over IP being developed. And this is how we see blockchain fitting in. It addresses critical topics which we see as flaws in the current internet architecture. Probably many things you have heard already. I mean, we have the data monopolies driven by Amazon and Facebook as such. We have privacy abuse, we have fraud topics. We have legacy systems which are not efficient, and we have data hacks which expose our personal data. And blockchain can and does offer a solution to this, because as a puzzle piece in this internet architecture, it offers more control, more trust, more transparency, higher security levels, and higher efficiency. And this is where we also see the most benefits coming out. And also in short term, if you look at kind of the impact of blockchain, you see a lot of studies being made and percentages and billions potential being depicted. But in the essence, it is a tool to increase efficiency, to significantly reduce your time and production times and increase productivity. And this is where we see also a lot of interesting projects happening at the moment. How do we invest in blockchain? We see that if you look at the major growth phases of technology, there have been on an infrastructure level over decades certain developments which, as I said before, enabled the potential of a new universe of business models. And some of them of the internet giants you can see in the 2010s, Uber, Salesforce, and where Slack, Zoom, etc. have become growing. And we will see soon, and we already see some out of our blockchain ecosystem. So how do we see and how do our funds fit in? We have, as I said, one fund which really focuses on the decentralized networks, the infrastructure and the protocols in the blockchain world, which are the basis for developing certain ecosystem projects. And alongside, we see that with the growing market of the crypto and the blockchain ecosystem, we see necessary applications developing in the crypto and blockchain ecosystem, but also specifically targeted for the kind of blockchain enterprise world. And there are two theses mainly we see as dominant here. On the one hand side, there are, when more and more professional investors are coming in, when more and more institutionals are playing in the market, it is a call for more institutional grade services. So on the one hand side, we see a huge opportunity in the future on application and services for the crypto ecosystem, be it key management solutions, custody solutions, staking services, data providers, or simple topics like being able to file your tax report with your crypto trading activities. All these are becoming more and more necessary. They are growing alongside with the growing crypto and blockchain market. And the more institutional the market becomes, the more institutional also these services have to become. And then we see another trend emerging, which is mainly a B2B play. And this is also where we see blockchain playing out first. This is that, and this has become true for Corona even more, or due to Corona even more, that we are lacking a certain digitization. And this is true for Germany, this is true for the entire Europe, and we're lagging behind in certain topics here. So companies are forced to transform digitally, and blockchain can offer a perfect toolbox for startups to build services on top to offer to these corporates as a competitive advantage using blockchain. And what we see there are cross-industry topics, of course, such as supply chain services, cybersecurity topics. Identity is a huge topic at the moment. And everything around IoT and data sharing, be it privacy data or be it machine data. And this is the ideal situation where we see startups which have a cross-industry approach. And of course, they might have a certain industry-specific application just because they come out of the automotive space, for example. But the ideal is that you have a clear go-to-market focus within one industry, but the vision and the scaling potential is cross-industry. And for this thesis one, for example, kind of a proof where we are at the moment, we see that there are crypto unicorns emerging. We see incredible valuations for companies like Coinbase, even more so since the IPO. And we see more and more institutional players coming in, kind of proving this necessity of the enhanced crypto services we need here. And what is also interesting to see is that there is a lot of M&A activity happening already in the crypto ecosystem. So we have on the one hand side, the existing players such as Coinbase or Binance, for example, acquiring CoinMarketCap. But we have also new players coming in, such as PayPal acquiring Curve. And this trend will continue happening and will consolidate the market. And these are kind of exit opportunities for companies in this ecosystem. Now, if we look at the other side, the growing enterprise software market, we see that Corona has accelerated this enterprise software adoption. So on the one hand side, the enterprise software market, on the other hand side, also the enterprise blockchain market, they are all growing significantly in the past and are projected to grow even further in the future. And this is where we see a lot of applications happening at the moment, and where also we are, as a fund, we look for what is corporate engagement, what use cases do we see. So for example, I took out this automotive industry as an example. So if we talk to corporates like Daimler or BMW or other providers in the market, we see that there are dominant blockchain use cases they are looking after. So supply chain is probably one of the major use cases in this industry, where it's about track and trace, where it's about part provenance, where it's about circular economy, and with the driving forces in the e-mobility sector, especially also figuring out what is the entire battery life cycle like. So this is where companies are engaging, where companies are partnering with other startups, where we see a lot of activity. And our approach personally is not only kind of looking from the startup side, what use cases do they offer, but really talk to the customers or the potential customers, so i.e. the corporates, what use cases are they interested in? And this is kind of where we see our deal flow coming in. On the one hand side, of course, through our standing in the market, but on the other hand side, also actively approaching and searching for solutions for certain topics interested in by corporates. And I've just listed a few examples out of our deal flow, just to name one, for example, Xylene as a case, which is also an investment of ours in our second fund. Xylene has been one of the top 10 space tech companies voted by the European Space Agency. And they have found an interesting way and a scalable way to combine blockchain technology and satellite technology to offer a clear path for track and trace and traceability in the supply chain. And they are blockchain agnostic. They use Hyperledger at the moment, but they could easily switch within the blockchain protocols depending on what is necessary for their scale later on. And this is interesting, and this is what we look for. We look for a clear go-to-market approach. We look for a clear value proposition where blockchain can be used, and is it really necessary, and is it necessary now? And this kind of leading to potential customer traction. And on the other hand side, this leads into a market where there's a clear regulatory push. With the Lieferkettengesetz coming, so the Supply Chain Act, there's a clear need for corporates to engage in this kind of technology solution, and it's easier to use and more seamlessly to use than other solutions. So this clear value proposition in a B2B approach is something, as an example, how you can position yourself. What is interesting to see as well is that a majority at the moment of investments in the blockchain space, so I'm talking about equity here, is driven by large corporates. So if you look at the corporate venture capital world, they are very active. They understand the potential of token. They understand the potential of equity, and they have a clear strategic play here, and they invest more on a later stage onwards, so Series A upwards, whereas venture capital funds like us, we invest from a pre-seed stage onwards up to Series A with follow-on investments up to Series C. So if you think about approaching investors, not only the typical VCs are interested, but also the strategic venture capital arms of corporates are interesting players in this industry. Now, as this is not only kind of a presentation or webinar about the state of blockchain in Europe, it's also about what we look for in teams. And as token is enough discussed already in media, we thought that especially for a webinar like this, it is interesting to see what is the potential of blockchain on the VC side, on the equity side. Obviously, token always plays a role in some business cases, but this is what we have been diving into and what is also our focus of our second fund, for example. And so what we look for in teams and what stages do we look at? We look at stages of startups in pre-seed, in C primarily, and Series A opportunistically. And what we've from experience realized is that sometimes even this definition already is something where startups struggle. So what am I? In what position am I? So pre-seed typically is where you have like 1 year since founding, you have an MVP in place, you have maybe first trial customers, a POC, and you don't have a clear view yet on the market or on customers. And on the other hand side, a seed is where typically you have an MVP in place, you have first product features, you have a first feedback of the market, you have initial sales strategy in place, and you're kind of raising for further product development and further customer engagement. A Series A in this case is for expansion, right? You have a clear proven go-to-market strategy. you have already a well-developed pricing, and you're raising to meet the increased demand of market and customers. And don't be too eager to classify yourself to the next round possible. So if you're a pre-seed company now, don't try to fit into the bucket of a seed vehicle. Take the time to really build on the KPIs and traction. And kind of the typical average investment sizes we do, pre-seed is 200K, seed is 800K, Series A is 1.5. And as I said, we have a clear value add program where we kickstart, we build the KPIs and the benchmarking and the reporting standards. We have a so-called PACE phase where we work on building customer relationships, because this traction you need for your fundraising phase. And just to give you a few examples, and I won't go through all, I will show you a few metrics VCs are looking at. Right, in the pre-seed phase, it's mostly qualitative. So you look at the experience of the founders, you look at the team, the pitch, how hungry is the team, how well is the market vision. But if you look at a seed stage, you as an investor expect clear KPIs, and you want to be within that benchmark. And this benchmark is derived from the most successful SaaS companies out there. So typically in a seed stage, you would be looking for a funding between like $500,000 and $3 million, but already having recurring annual revenues from $500,000 to $2 million, with a year-over-year growth rate of 60%. And by the way, we will distribute this presentation later on, and it's recorded, so you don't have to write these figures but if you want to raise a Series A, you really have to make sure that you're meeting some of these KPIs, and the most important ones probably being the recurring revenue. So it makes no sense of trying to raise a Series A if you don't show some kind of traction, and don't try to get too much funding too early, because that increases your valuation over proportionally, risking kind of the downturn side. And this is, I won't go into this in detail now, but these are typical other KPIs VCs are looking at. So sales versus your R&D spend, depending on what stage you are in, what's your monthly burn rate, what are customer acquisition costs, what are gross dollar retention rates or net dollar retention rates. These are probably one of the most important SaaS metrics you can look out for. So if you're a pre-seed or a seed company, try to keep track of these KPIs, try to look what the investors are looking for in later stages, and try to build relationships with your potential investors before you are in fundraising. Investors typically want to get to know you early on, and not only get to know you when you are already fundraising. So if we're looking at a business proposal, and this is a lot of text, and I know for a presentation, but you will have a look or a possibility to go through it in detail later. But just make sure that you have a clear problem stated, which is ideally derived from your past or pain points you have, that your solution is clearly defined. And in the blockchain space, you need to answer the question, why blockchain? Is it really a USP? Is it really better than using centralized systems? Or is it just another buzzword on your pitch deck? And also the question of why now is extremely important. So is there short-term revenue potential, or is it a dream which becomes true maybe in 4 or 5 years down the road? So the business model, maybe not in a pre-seed case, but latest in a seed or Series A case, you need clearly defined revenue streams, and also have certain KPIs on that, and try to get real customer feedback. So many startups we talk to, they lack of a clear view on what the customers really want. So call up your potential customers, try to get exposure, try to get feedback, on your market and on the service offering, and the pricing topic will define on the way as well, and have a clear view on competition and your go-to-market strategy. So these topics are typically stuff you need to show for in an initial pitch, and other documents, especially in seed and Series A, have a data room prepared so that if there are questions that you're able to follow on and follow up quickly with investors you are engaged with. I know we're running shortly out of time, but maybe one more topic I wanted to show. So pitfalls we typically see in startup pitches which approach us. So is blockchain really needed? This is something crucial if you're pitching to, if you have blockchain as part of your business model. Any professional investors will see through this right away. So it's no sense of putting blockchain on your pitch deck if it's not a clear USP, and if there is no clear advantage to centralized system. And blockchain might not be the solution for all in every case. So this is something we really go into deep. And if there is a token model involved, the value has to be in the token. So clearly defined token economics, how is the governance structure, supply, etc., etc. So just having a token for fundraising, this is a moot point. Also, what we see regularly, and due to the experience of founders we endeavor in the blockchain space, in the B2B space, they're coming out of a corporate setting, and sometimes the pay they are trying to get out of first funding, having 100, 200K yearly salary, is just not a startup world. So you have to be prepared that if you leave your current job, that you won't get your salary as you are used to maybe from a large corporate. So we want to see that you're able to bootstrap, that you're able to scale, and there's no harm in increasing your salary if you're successful. But in the beginning, you really have to be lean and be efficient on prices. And the same with kind of the work ethic, coachability, and the startup culture. And try to get in young talent, which you can build up over time. And something we see not as often in the European space is that you have the ESOP programs in place early on. So try to, on your cap table, reserve ESOP as a share for incentivizing good HR capabilities early on. And what I said before on valuation, what we often see is that founders try to achieve the highest valuation possible, but this can be a great risk, because for the funding story you're trying to build, a down route potentially is the worst case scenario. So try to really only raise what you need, and try to be able to meet those traction results in the sense of KPIs and the revenue multiples achieved for that. So otherwise, you risk not getting the support following on by VCs. Also, and I understand this topic, that if you're a founder and you're coming out of an existing position, and you kind of have to juggle that new idea with your existing business relationship at the moment. However, in the moment where you're fundraising, there has to be at least a clear path when you're exiting full-time. We want to see clear dedication and not dedication to other topics. So if you are a founder, you have to be 100% dedicated to your startup, and no VC wants to fund a hobby as a part-time endeavor. And also, if you build traction, try to get traction from customers you had no relationship with in the beginning. Of course, it's helpful to get your existing relationships, friends and family involved, and customers you know. But the real proof of market is if you get feedback from customers which you are not in touch with before, and which when you can win those customers and you can show those KPIs, that is kind of a real proof of product market fit. So this was a quick run through through the presentation. We wanted to leave enough time for potential questions. So now I haven't seen the questions running in yet. So I just have to look for them. Carla?
Yes, hi. Thank you very much for the great presentation, Dominic. I also share during your presentation some poll for the participants to get to know them better.
Yeah.
And I was looking at the results, and I will share them right away with you. Maybe I will post it again so everyone can participate. So here you see the results. I think I cannot post it again without losing the all the results that we already have. But as you see, most of the participants today are SMEs using blockchain either as core business or at some extent. They are mostly pre-seed and seed to Series A companies. But regarding raising funds, I would say that we are kind of half-half between companies looking for funds and not looking for funds. And most of them are looking for equity or token sale, and many of them are interested in other. I would be curious to know what are they looking for. So if you can respond to that in the chat, that would be great to get more insights.
Yeah, probably it's convertible or some sort, I guess. but
Yeah.
But then very good. Then we already addressed criteria for pre-seed and seed as well.
Yes.
So I think that gives a good overview. In terms of questions,
I would like to start with my own questions, and maybe with that we can kick off the discussion. So feel free to post it in the Q&A section. The first, you mentioned that the most important KPI that investors are looking for in blockchain companies is the recurrent revenue, or show some kind of traction. So in the case that you cannot showcase recurrent revenue for some reason, what could you do in that case?
So in that case, I mean, there are different parts of revenue. So most of the time in the beginning, you maybe have consulting revenues, where you have some kind of customer engagement already, where just revenues from your final product is not available yet or not possible. So this is great to show for, or some kind of customer feedback, customer engagement, or proof that there is a market. Because at pre-seed seed, you are investing at this threshold of product market fit. And what is most interesting for an investor to see, and what is, I mean, the biggest effort in our due diligence is really getting reference calls with customers and trying to figure out whether there's a demand for such a product in the market. If you are very early stage and you have an idea and there's no proof whatsoever, you somehow have to prove why you think your idea is a good idea, right? Either from experience, because you have seen some sort of pain point in your existing corporate or business relationship, because you have worked in that industry before, because you have worked in that specific process or position. So just saying, like a VC or investor will never believe you what you're saying. So what they're always doing is they need a proof point, either through their own desk research or through interviews they're conducting. So this proof point is a real, or probably the biggest portion in every due diligence. So you have to give that certainty and this level of trust by either deriving from your experience or from customer engagement, or because you can already show traction.
Okay, perfect, clear. Second question. I find really interesting that you said that you should start building relationships with investors, even if you're not yet looking for funds. How does that look like in the reality? You just reach out to investors and then you said, hey, meet my company, or how would you advise to start fostering relationship with investors?
Yeah, being really honest. So writing an email and saying, well, we have raised our seed or a pre-seed round. We are engaging with these and these customers. This is our traction. We really like to get in contact with you as an investor and be able to introduce you to our product and service, and then build a relationship from there. For example, organizing update calls every quarter or every half year, just so that the investor has a possibility to compare where was kind of the first touch point, how have you developed since then, and it takes out the pressure for the team in fundraising, and you can build a business relationship without that pressure of fundraising, and it enables the investor or the strategic partner to get to know you on another level, and you can have honest discussions, as I said, yeah, without the pressure of fundraising. It's what's true for a startup is also true for us, right? If we are raising for funds, the family offices or investors we connect with, they tell us the same thing. They want to build a relationship. They want to get to know you as a team. And for us as well, as the earlier we get to know the team, how they work, how they handle certain topics, is the better it is, because in the end, you're investing mainly in the team and how they handle certain markets, market developments.
Okay, I will follow up with one question that we got from the Q&A, and this was actually going to be my follow-up question. So unfortunately, I cannot see who wrote it, but it says, how do you meet with investors during current times when personal meetings and events are not really taking place? Are cold emails or calls new normal?
Yeah, so Zoom calls have been the new normal. You can see I'm in the home office myself. We are generally very digital. I must say, if you're just writing a message on LinkedIn, for myself, you get so many messages, and it's a shame, but you can't react to all. So if really try to figure out who that investor is, what is their investment profile. There is so many ways to get in contact with investors. For example, us, you can shoot us a mail at pitch@blockwall.capital. I can write that in the chat as well.
Yeah.
I see a question there about that. Or myself, db@blockwall.capital. So direct messaging, getting not frustrated if there is not an answer directly. Everyone tries to be as reactive as possible. We, for example, we track our internal KPIs, so we try to give a response to any deal which comes to us within maximum 7 days, and an initial reaction earlier than that. So that, I think that's only polite to be able to react directly. And yeah, there's no other option, unfortunately, than Zoom or digital. And of course, there are events, but unfortunately, it's not the same as it was. And I hope that it goes back to normal soon. But direct email communication is probably the best.
Yeah, I will agree on that. We have another question posted in the chat. I will read it out loud for you. Do you think more and more VCs will be convinced by this technology? There's been a lot of buzz around 16Z recently about their crypto blockchain round, but that's the US. Do you think that there will be more VCs in Europe respecting and wanted to be involved in blockchain startups?
Yeah, definitely. So we see a lot of VCs in the space. I mean, the dominant markets are where we see the venture capital hubs, like we see in traditional venture. So that's Switzerland, about kind of the crypto valley. It's Berlin, it's London, it's Paris, it's Amsterdam. So you kind of see those hubs, the same hubs you see in venture as well. This is at least where we see our prominent deal flow from. Of course, you're right. I mean, Andreessen Horowitz, as a dominant player in the traditional venture market, is also becoming a very dominant player in the crypto space. And the US is probably 20 years before us in the venture market. And we're trying to catch up, and we're getting better in Europe, but there is a lot to do still. And it also is kind of due to there's a funding gap in Europe, right? There is not only in blockchain, but in traditional venture. It's based on the investor types we have who are investing in funds, which again invest in founders. In the US, you have institutional funds investing in VC. Here in Europe, you have more kind of the private investors and family offices investing, and some sovereign funds like the European Investment Fund or bwcon or the KfW, who want to be signals or have a signaling effect. But yeah, it takes time.
All right, thank you for that. Finally, another question that I had was that you mentioned raise what you need. So could you maybe elaborate more into that? Because maybe I can imagine being in the position of an entrepreneur, and it would be hard to assess exactly how much money do I need. And yeah, how can I do that properly to avoid those pitfalls that you mentioned?
Yeah, I mean, you probably have a greater vision, right? Where it's a business plan derived by market potential from the market side. So more the top-down approach. And for this, you will have some kind of criteria on what you need in terms of HR, capacity, etc., which gives you a certain budget, and you could raise for that. But what VCs are also looking at is what is your bottom-up business plan, right? What are your real costs? What is your 100, 300-day plan? It's like, what do you need for this year? What do you need to survive to the next funding round? Typically, what we are looking for is that you have a burn rate which lasts so that you survive 24 months at least to the next funding round. And to fulfill your business plan and your vision, this is kind of the moderating fact. What do you really need? And not raising kind of 10 million if you need 2 million. And also you don't want to give up so much equity in the beginning, I guess. And I mean, just to give you an example, we've seen if you're raising on a 5 million pre-money valuation, for example, and you're raising another 2 million, and which gives your post-money valuation to 7 million in the end. That moderates what revenue target you need to achieve to have, for example, let's say in software as a service, maybe you have an 8 or 10 times revenue multiple. So in order to achieve the minimum post-money valuation, you have to show so much recurring revenue so that you in the next round can achieve that post-money valuation as a minimum. So that the valuation pre-money plus what you're raising is moderating the fact what you minimum have to achieve in your KPIs to be able to raise the next funding round, not as a down round. And this is the moderating factor I believe is important to have in mind, because investors want to see a successful funding story, right? They want to see growth, and they want to see and support companies which show continuous growth over time.
Yeah, so kind of sustainable growth.
Yeah.
I will add that this advice does not only match blockchain startups, but
it's all
yeah, exactly.
all companies.
Just to clarify. We have another question in the Q&A section. I will read it also for you. Is beautification of pitch decks as important as the material inside, or a normal looking pitch deck with great business opportunities still has more value? Is that understandable?
Yeah, so I guess do you have to spend the money to run it through marketing consultancy or so? So I mean, it's a very opinionated fact. It's more about the content and the structure, because the way you are selling yourself is already a judgment in yourself how you probably sell to your customers. So if I see a very bad pitch deck in terms of structure and your content is all over and you can't clearly communicate your value proposition and USP, it also tells me something about how you yourself are structured, how you yourself sell. Because if you can't sell yourself, how should I expect that you can sell your own product? So this is also what we're if you're in a pitch call with us, and we're doing 4 or 5 pitch calls over time with different people in your business, we want to hear the same story, and we want to see if you're responsive, if you're coachable, how you react to certain questions, and as I say, it's the best test, and that's why VCs or any investor likes to get to know you early on, because then they get to know you as a person. How do you act? And having strengths and weaknesses is human, right? But just knowing about them is important. So yeah, long answer to a short question. But you don't have to spend hours and hours to make the presentation beautiful, but pay attention that you, in a crisp way, can communicate your value proposition, and what you want to sell and what you want to achieve, because that helps yourself to define your strategy, and it helps the investor to really grasp it, and it helps your customer to understand your value proposition as well.
Okay, thank you very much. I would say that with that final question, we will wrap up this session because we are almost reaching the hour. Thank you very much, Dominic, for your great presentation, which will be available for the participants, as many of you are asking. You will receive a follow-up email also with a survey feedback that we really appreciate that you answer, because we are always looking to improve our services. And a final invitation, we will have an e-pitching event this Thursday on AI, IoT, and mobility. If you are interested in participate, some of Investor Horizon accelerated companies will be there. Here's the event, the link event, and where you can also register to see the pitches itself.
Oh.
And the next webinar will be happening, as I said, within the upcoming days. So stay tuned to the to Investor Horizons network and social media, where we will promote this. It's about due diligence, as I said. And you have already the contacts from Dominic here in the chat. I hope that you have really enjoyed this session, which will be uploaded in the Investor Horizon website for your convenience. So you will receive an email from me. Thank you very much for joining today, and have a nice day. Thank you, Dominic.
Thanks a lot, everyone.
Bye-bye.
Should we share anything?